Hey guys, thanks for coming today. This is the first Get Smart Group webinar with Blue Wind Marketing. Some of you might recognize Scott and myself from the Get Smart Group, and we're joined here today by Lewis Goldstein from Blue Wind Marketing. Lewis, why don't you give us a little introduction of what you do and how we know each other in the industry?
Yeah, so hi, I'm Lewis. I'm a fractional chief marketing officer who works with businesses in the home service space, connected with Scott at the Pool Industry Expo in Monterey last year. And we saw a great opportunity to collaborate to discuss how to use data to make better decisions.
Awesome. And we are always looking for brilliant new minds to bounce ideas off of and collaborate with because sometimes because we're so close to what we do for our customers and the way we do it, that we might miss things that are happening or miss looking at it from a different perspective. So that's why we wanted to come together today and share some different perspectives on what's going on specifically with metrics reporting in the industry, and especially given the concerns recently with the tariffs happening. Some of them are already in place, and we've seen some manufacturers raise their prices to adjust for that. And some of them are pending and may or may not happen, and they may be at different percentages. And from a leadership perspective of a CEO trying to guide an organization down the path of where they are going to be successful and potentially be held accountable by shareholders, we're trying to help provide metrics and data to our companies, small or large, along the way, which is what we've always done to help them make their marketing making decisions. And we're seeing how more and more that's becoming critical for people to be able to look at the numbers and move quickly to adjust for different circumstances with different pricing models and different costs. So I'm curious, Lewis, what you've heard thus far from your customers on this topic, or just concerns about data and metrics in general that might be coming to the surface right now.
Yeah, great question, Ali. So, one of the biggest challenges is knowing what decisions to make based upon the data. With more data than ever, a lot of CEOs are not confident about what they're making decisions on. Sometimes they believe there may be a false confidence. I'll give you an example. eBay many years ago was spending a lot of money on Google Ads, several billion dollars. And they didn't know the true impact of the actual advertising. So they brought in outside help. And they discovered that in fact that the money was actually wasted, that the people they were advertising to would have bought anyway. So what happened was it was a classic mistake of confusing correlation and causation. They thought they were ads cause sales, but in fact they were correlated. And so if a multi-billion dollar company like eBay, which has a market cap of 29 billion with top talent, can make a mistake like that, it begs the question of sometimes it's not what data are we overlooking, but where is there data where we may be misinterpreting it? And so I like to always make sure that we're looking at the data correctly and we're not looking at things from a causation standpoint when instead they're correlated.
Mm-hmm.
So that's where having data scientists or data analysts who
Mm-hmm.
can actually decipher the data correctly is vital to making sure that we're not spending advertising money on areas that aren't the best use and instead could better allocate it.
So, for instance, in that situation, it could have been better to invest the money in SEO so they would get more organic search visitors to their website
Yes.
versus to traffic for ads. Okay, that makes perfect sense.
It's interesting.
Um,
We've actually seen that. We have a client in New York, and over I want to say a 5-year time frame, we just kept making consistent investments in their website for organic search purposes to increase their organic results, and they ended up pretty much top one, two, or three across all their product lines within about a 50 to 75-mile radius of their store, which is about as far as people will go to buy a pool or a hot tub. And one fall day, we were meeting, and they were spending probably 25,000 a month on paid ads, and in a profitable way, right? We can track, all the way down from cost per lead to cost per customer acquisition and all that and all the margins. But the question was, what if we just turn the ads off? Like, just stop. And what's going to happen? Will our traffic go away? Or because we're ranked so highly, will the people, to Lewis's point, who are going to buy from us anyway, still buy from us? And it was really interesting because, you know, in that time of year in New York, it's hot tubs, not pools, right? People aren't buying new pools in October in New York. They are buying hot tubs and other things. And we tried it for about a month. I think we did it for about 3 weeks. And yes, traffic went down. And yes, unit sales went down from what we were expecting and projecting. However, the total net profit to the business went up because, you know, if they were expecting to sell, let's say 50 hot tubs and they only sold 40 instead, but they also didn't spend $25,000 to sell those 40 hot tubs, very
Mm,
different outcome. So, you know,
yeah.
really understanding the seasonality of ad spend and traffic and buyer demand is really important to this as well. But yeah, to again to Lewis's point about data scientists, I've never been called a data scientist before, but I think I have some skills that qualify me to think about myself that way. And really at the end of the day, I mean, and we're going to go into some more details on this in a few minutes, but that level of understanding what the data is actually telling you and how it is impacting your business and the bottom line is much more important to as
Mm,
opposed to how many phone calls did we get today.
yeah.
It's important, but it's not the whole picture.
So you spit out a couple terms there, Scott, that I would love to define for people. KPIs, cost of customer acquisition. I'd love to hear what you think like the top three terms are that people should familiarize with themselves with first if they're looking to start um, using reporting and relying on data for themselves and their business. And let's just imagine they're starting from zero. And then we can talk
Sure.
about companies at different levels. And then, Lewis, I'll have you answer the same question.
So, you know, let's define a couple of things first. First off, KPI stands for key performance indicator, and this is a number that you look for a goal, right? So it can be as simple as we want to sell 100 hot tubs this year, and we're halfway through the year and we're at 50, which means we're on track to hit that KPI.
Mm,
Or we're at 30, we're behind. What are we doing wrong? What can we improve? Or is it just a function of seasonality? But same thing of how many leads are coming in per day? How many leads is a salesperson bringing in per day? How many activities is a salesperson completing every day? And these are, you know, KPIs can go way deep, but ideally you're trying to distill it down to a few critical numbers that impact your business. And really there's two, and again, this is very broad, but there's sales KPIs and there's marketing KPIs when it comes to, you know, what we're looking at and helping with a business. So I actually printed out some specifics here, and I'm not going to cover all of these, but just to give you an idea of thinking through it. You know, specific sales KPIs that we'd like to see, like I said, number of activities by salesperson. So if you have, and by the way, topic for another webinar, but everything that we're talking about here requires a really good CRM system for your business, a customer relationship management software. So you as a business owner, as a manager, can keep track of all this stuff. And you have to hold
mhm.
your team accountable to track all this stuff, or literally everything we're talking about here is completely moot and void. So on the sales specific KPIs, number of activities by salesperson, ratio of meetings booked to number of activities. So if all your salespeople are completing 100 activities today per day, are they all booking 20 appointments, or is some
Mm,
booking 5 and some booking 30? That will come into play later. Total pipeline value by month and by quarter, and also on a rolling basis. Raw number of leads by month, by quarter, by product. Average time from lead to customer, but then also by source. So you could find out that a Google ad lead becomes a customer much faster than a Facebook ad lead. But the other piece that I guess I'll jump into right now real quick is we have to remember that these products, hot tubs, saunas, swimming pools, have surprisingly long sales cycles that most businesses are not aware of. We, in
mm,
almost all cases, reference a hot tub as a minimum 6-month sales cycle. And that doesn't mean
mhm,
they've contacted you. That means they're talking about it at home before they contact you. And a lot of that sale is already complete by the time they get there. And the reason I
mm,
bring that up now on a sales KPI basis is It might be the case that a Facebook lead takes a year longer to close to become actual realized revenue than a Google lead. However, if you have that kind of time horizon to look at, it might be cheaper to acquire customers on Facebook. It just takes them
Mm.
longer to convert. So money you spent a year ago becomes revenue today. But if you don't have that CRM and that tracking in place, you can't see that. Leads generated in March is not a good proxy for number of hot tubs sold in March. You need to be able to
Mhm.
look back and go, all the leads I acquired in March, you need to look at that in December and then see how did that number change over time. It's really important. So anyway, that's kind of a general idea for sales KPIs. And then on the marketing side, cost per lead by conversion type and source, website bounce rate by source. Bounce rate means someone comes to your website on any given page and they leave your website on the same page. They don't explore further. And you'll often find that different traffic sources have different bounce rates. And you could be, oh, I'm getting all this cheap traffic from Instagram. All these people are clicking on our website, but it turns out they all leave in 2 seconds. So wasted money, right? Average number of pages visited, average time on site, number of phone calls by source, new versus repeat phone calls. There's some other ones I'll talk about later. I don't want to give Lewis a chance to talk here. We
I
found
told you could interrupt, Lewis, anytime.
one of our
Just
clients,
jump in.
we installed this amazing software called AirCall that helps determine. It's a phone system that does all sorts of amazing features, but we figured out that on busy days they were missing half of their phone calls. Half were going to voicemail or going into the automated attendant and then hanging up. And so we advised them, you need to hire just a phone person. And they did. It's a relatively low cost employee, but their unit sales went up 30% in over 30 days later because they were just
Mhm.
literally answering the phone. So understanding when you get a report like that and you're like, well, I knew we were missing some calls, but you're missing half. That's a big issue. And that's an interesting point to look at in the business. So that's kind of my
What does KPI stand for?
key performance indicator.
Key performance indicator. So that's just, helpful for people who haven't heard that term.
Mm-hmm.
A lot of people don't know what SEO stands for, what CRM stands for. And so because we do this, I think it's helpful to define the term for people
Right.
as we're discussing what it is. So Lewis, I'm going to have you answer the same question. What are the say top 3 things that someone just starting out should be paying attention to in reporting and metrics that will be helpful for them?
Yeah, great question, Ellie. So I like to make sure that we're tracking MQLs, which are marketing qualified leads, sales qualified leads, and then leads. If marketing qualified leads are not leading to sales leads, then there's going to be an issue. And let me just tell you a quick story about that. I was talking with the receptionist of a client, and we were using CallRail, which is a great platform for tracking phone calls. Quick backstory is they had been advertising on a lot of different channels, offline, online, and didn't know where they were getting calls from. So we ended up putting in CallRail, and they had an impressive 98% call answer rate.
Hmm.
Amazing. Almost as good as it can get. But we noticed that appointments were down while leads were up. So I spoke to the reception and I said, how quickly are you following up with leads? And she said in a nervous tone, 15 to 20 minutes. And I was taken aback. I knew that it was probably longer than 15 to 20 minutes. It turns out that Harvard found out that the first 5 minute window after a person submits their information is the golden window to get in touch with someone. And if you don't, that it drops significantly. It turns out that a lot of folks, unsurprisingly, choose to buy from the first company that responds to them. I'm sure everyone can relate to this. Something comes up, you want to get in touch with someone, you don't want to wait around. Even if they're not the best in the world, the fact that you're able to talk to someone. So I was able to figure out that that was one reason why there was a gap between the marketing qualified lead and sales qualified leads.
I'll interrupt you real quick there on that point because a very similar anecdote, but just a fact to put into people's heads. Yes, that 5 minute window is critical, and the drop off, if memory serves, is north of 60% of likelihood to close. I mean, it's huge in that 5 minutes, but you have to think every single lead that comes into your business has contacted at least two of your competitors, at least. And not only is that important, I mean, and let's be honest here, you're not the only game in town, right? There's going to be a competitor, whether you think they're a competitor or not. The consumer has no idea, but the first person to contact them, and I promise you, they have contacted at least one, more than likely two of your competitors. So get back as quickly as possible. Sorry to interrupt. It's just like you got to remember that, as far as they're not just filling out your form, they're filling out all the forms.
Exactly. And so that also begs the question of how good is your CRM when it comes to talking to, whether it's CallRail or Google Analytics or Google advertising. I've seen time and time again CRM systems that were set up that no longer are up to date. They may not have APIs, or they may not be working as well as they should. So I always like to recommend that while they don't have to get HubSpot, that they have a CRM that has APIs where it can talk to the different marketing technology very well. Because at the end of the day, as Scott just mentioned, you're not the only game in town. Your competitors may be using HubSpot. They may be using CallRail. And if they are using those tools, they probably have an advantage over companies that don't.
Yeah,
And,
it
and look, I
definitely.
mean, again, I could go on for hours, as Ken Lewis, about CRM, but Ali and I got our start in frankly business together, but more specifically in the pool and spa industry, building custom automated CRM solutions for pool and spa dealers. That's how we got started, and then that's what we got known for, and then here we are, right? 16 years later, keep it strong. And Ali was the salesperson. We built a tool to serve Ali in her role selling hot tubs and swim spas, and then
I was doing that on commission. So if I didn't sell it, I didn't get paid. And that was
the
before the Get Smart
manufacturers,
Group was an agency. So
right?
it was built purely from a profit motive to get me capable of managing more leads, educating more leads, following up with more leads in an automated way. So I could call the low hanging fruit. The low hanging fruit is the people who are opening emails, who are clicking on links. And in the CRM, my favorite thing to do when I logged in was look at that little report that shows recent activity, because I could call that lead that just opened that email and say, hey, I wanted to follow up with you. And they're like, oh gosh, I was just thinking about you. Yeah, I know. And if I have that indicator on my dashboard that that person has within the last hour interacted with something that my system automated and sent on my behalf, then I know that they're going to take my call, and they're more likely to be willing to talk about it right now because they're already thinking about it. It's in their head today. So if you don't already have a CRM working for you and automating your email and your education and sending the brochures to the people who request them immediately, then you need to invest in that, because it will be the superpower that takes you from a good salesperson to the best salesperson in the country selling that product, because you're going to be the one following up first, and you're going to be the one sending the most robust information in a personalized, friendly way, which is the approach that I've always taken. And it has become the approach that works best for quality, high value, high ticket items that people want to purchase. They want to be treated well. And education and answering questions is how we earn their trust and get our foot in the door. So yeah, I can definitely speak from I've done that perspective, and the CRM is a must if you don't already have it. So beyond the basic metrics, you both mentioned MQLs, marketing qualified leads, SQLs, sales qualified leads, and CRMs. What would you expand into as the next thing people should be paying attention to, the next key item that they should be monitoring on their list of what they're going to be able to have access to? Should it be their website analytics, like the traffic they're getting, organic versus otherwise? Should it be something beyond that, how they're ranking against competitors in SEO? Should it be how many reviews they have? Like, where should the attention go after they've addressed those first three things?
Yeah, conversion rate, to me, is very important, because at some point you can keep spending money on advertising, but there's going to be diminishing returns. It's going to go down. So if you're spending a certain amount, it depends for each company based upon their market. It does make sense to then focus on conversion rate optimization. And that can make a huge difference because it's not just about getting more traffic, but it's on the other side of the pyramid, which is conversion.
Mhm.
Because you can have the same amount of traffic, the same amount of people coming to your website, but instead of getting, say, 10 people to convert, you can get 12 or 15. That can then make a huge difference and you can invest more into advertising. So I've seen it be where adjusting the landing page can make a huge difference, such as moving images above, maybe having less copy, seeing it be where copy, while the marketers like to say copy's king, I actually like to say in this industry, it's not so much king. It's very much the circumstance because copy can hide images of pools or hot tubs that the actual customer or prospect wants to see. So, and then one other thing that can hurt conversions is having too many fields in your form. If you have 7 or 12 or 15 required fields, they're likely going to bail. Why? Because it's just too much work. All they want to do is talk to someone. Instead, make it easy. Spoon feed them, I like to say. Streamline it so it's much easier for them to get in touch, lower the compliance threshold, and then when they do get in touch, then you can ask additional questions. Oh, what part of town are you in? What's your zip code? What's your address? It's not all needed in the beginning. Just make it easy for them to get in touch, and that'll boost your conversion rate. But at the end of the day, if you have a low conversion rate and you're spending $100,000 a month on advertising, there's going to be a mismatch. So it's very important to make sure that the advertising, the landing page experience is congruent. That's the easiest way to build trust.
Yeah, and I want to jump on a point there because there's a double-edged sword with content and copy, where a lot of copy is going to help improve your SEO rankings. So you're going to get better organic results and more traffic to your website. So you have to find that balance between where the copy is on the page, which is what people are going to read and the search engines are going to crawl, and easy conversion options. And we have something that we call a welcome mat. We did a whole bunch of A/B testing, 2 different styles of forms and whatnot. And on every core product page, we had the very first thing above the fold, right on top, is we see you're interested in pools or hot tubs, and they're specific to the product page. Just give us your information and we'll send you a brochure. That's it. And that has increased conversions in some cases over 100% by just going right to the point. And it's been really interesting because I've been teaching at conferences and online in this specific space for over 10 years now. And I've watched the arc of consumer behavior and how they want to interact. And I don't know, 10 years ago, it was definitely the case that they didn't want to talk to anybody. They wanted to educate themselves. And in any sales environment, one of the reasons salespeople get a bad rap is because there's a gap between what the salesperson knows about the product and what the customer knows about the product. And the bigger that gap, the more tension there is in the conversation. And a bad salesperson can almost become condescending, and that's a whole nother conversation for another day. But what consumers are doing is they're trying to close that gap before they talk to a human. They want to peruse your website. They want to read all the information. They want the brochures. They want to compare you to your competitors. And, we all know, for example, that for the most part, number of jets in a hot tub is completely a red herring metric, right? It doesn't matter. In most cases, fewer jets is better because they're more powerful. But some people will come in and say, well, that hot tub is, $50 cheaper, but has 10 more jets. Like, okay, and then you have to educate them as to why that's not an actually important piece of the puzzle. But when it comes to that conversion rate optimization, we've had colorful conversations over the years because the salespeople will say, well, I only got a first name and an email address, and they're not replying to me, and this is useless, and I can't sell to them. And then it's like, well, but we got them, right? We got the lead, and we can follow up with them automatically because they're early in that buying process I was talking about earlier. They might be 6-12 months out from making a purchase, they're not going to talk to you at that point. They're going to wait until they're closer to actually pulling the trigger. And if you put a form in with 15 fields, what's your zip code and your address and all this stuff, they're just going to go screw this and not fill it out at all. They came to your website, but they're not going to get in touch with you. So finding that balance is really critical. And I've always talked about it. Like some people will have a button on their website that says get a quote. And that's okay in some places, but you're reaching into their wallet too soon. They don't want a quote. They want information. You're early people, right? They want information. They want to learn. And if the only option to get in touch with you is get a quote, you're going to lose conversions because there's people who I don't know. I'm not ready to talk money. I just want to know if you have what size they are. And those are big questions. So you have to think about all these pieces of what the interaction is going to be like on your website to maximize all the visitors to your website and turning them into at least marketing qualified leads. And Lewis, could you do me a favor and define marketing qualified lead and sales qualified lead? Because that's not a lot of people are familiar with those terms.
A marketing qualified lead is typically someone who provides their name, email, and phone number, a way to contact them. A sales qualified lead is someone who sales says is a qualified lead. They have the budget and interest.
Yeah, so in most cases, they don't convert to a sales qualified lead until they've talked to a salesperson. And the salesperson has, and this is also important for a business, the business needs to define what is, I call it the cliff, right? When do they go off the cliff to become a sales qualified lead? The business needs to define that. Okay. Is it just they have a budget? Is it they've had, we've talked about at least 3 of these 5 things. What is that so that it's consistent, so that you don't have.
And what about like geographical considerations? Like this person is on the other side of the mountain from where my showroom is, and I don't deliver that far.
Right.
But only 20 miles, but as the crow flies, they don't know as a lead how far you will deliver and service a hot tub or a swim spa. Right. So you have to define that as well. Like, are you outside of our market or are you in our market? And it's helpful in your SEO and in your website content, and even on your landing page in some instances, to say we serve these areas. So you don't end up getting a lot of leads in another state 500 miles away that loves your website, loves your content, but isn't a customer that you'll actually do work with.
I want to add to that. Great point, because I see companies that want to help everyone. And I think that's the biggest problem they face is they care too much. And they really should care less about everyone and care more about who can they help the most. And that's where, as Ali had mentioned, defining in the beginning. I find that the phrase slow down to speed up is paramount to marketing. That if you just want to move at the fastest speed, let's get leads without understanding who do we want to attract and who do we not want to attract. And to the point of on the other side of the mountain or in another state, making sure that you're hyper aware of who do we not want to attract. For example, if you're a pool builder and you want to target just higher end zip codes and you don't do fiberglass, you should be very clear about that.
Yeah.
Because if your salespeople are talking to folks who want a fiberglass pool for a quarter of a rate of a gunite pool, it's going to be a waste of their time. They could be following up or educating or meeting with customers, with prospects. So I find that in the beginning, it's very important to talk about what to define things. So everyone gets on the same page, because it's not just about the salespeople. It's making sure the marketing and sales team are aligned, because when everyone sees eye to eye, it doesn't just lead to better results, but it leads to a better working relationship.
Yeah.
And bringing this back to the concept of metrics, you can't define how many sales qualified leads you got unless you define what sales qualified lead means, and everybody agrees to that definition. And again, this is why you need CRM, because if you're just getting leads, how do you know? When do they convert? How are you tracking the number that actually are converting? And then again, in an ideal world, all those leads would be tracked back to original source. Did they come from organic? Did they come from a billboard? Did they come from Facebook? Did they come from Google? And then, over the course of a rolling 12 months, you can look at that and make even more informed decisions on the business.
Yeah. So, if I'm a new business owner, not a new business owner, but if I'm just starting out with advertising and I've been in business for a few years, I've got money to invest in marketing, I'm putting some ads out there, maybe boosting some posts on Facebook. What metrics reporting is right for me and how do I know? Because there's a million tools out there. And I'm curious, first of all, like what's free and still reliable that I have access to? And what else is out there that's worth me investing in when I'm just getting started with this stuff? And I'm curious what systems you can name and what other recommendations you can make as far as what people should be using for their own reporting.
So two pieces to that. Well, there's always more than two. Google Analytics was for years the gold standard. And there were more advanced paid tools out there, but really not applicable unless you're, Nike or at that level. But Google 2 years ago converted it from what used to be called Universal Analytics to something called GA4, which stands for Google Analytics 4. And it took a wonderful, easy to use tool and made it incredibly dense and difficult to understand how to use. And it's still free, so I guess you get what you pay for. And it is way more powerful than it used to be. But in my opinion, and watching it in this industry, it has taken most small businesses. It added features that no one needs. It added lots of cool features, but they're not applicable to most businesses that still have a retail space. And so Google Analytics is free. You should absolutely have it on your website. And Google has some great training programs to teach you the basics of how to understand how many visitors are coming to your site, how long are they staying on your site, where are they coming from, what are the traffic sources. Most of that is built in. It's just a difficult interface to navigate, and whatever. I'll never understand what they did there or why, but that's Google. That's Google product development sometimes. And the second piece of this is on watching your website. Some CRMs have their own analytics tool, and you can combine that into one place. So again, if you're just starting, putting a baseline CRM in place that at least tracks the basics on your website, again, the metrics that I've mentioned, can be a good 2-in-1 option. And then
Can you name a couple of those CRMs? Just out of curiosity.
ActiveCampaign, HubSpot, High Level. Keep doesn't do a
Okay.
very good job. HubSpot's the best, but with that comes the price, but it's worth it in most cases.
What about Thrive? Is that something that people could
No,
get benefits
I
from that
wouldn't
way?
recommend
No.
it.
Okay. So ActiveCampaign,
Right there.
HubSpot, and High Level are three.
Yeah.
And what about like other external reporting tools? Is there some sort of dashboard people can plug things into that will show them, how their ads are performing, how their metrics are on their website, how many form fill outs they're getting, anything like that you would recommend?
Well, the problem is I'm not aware, and maybe Lewis knows of some. I'm not aware of any free tools that are easy to use. Google also has a tool called Looker Studio, which is absolutely incredible. It used to be called Data Studio. Again, very weird name change. And it will pull all of your metrics together into one place, but it is very complicated to set up. Very complicated. I mean, we have a full-time employee who does nothing but set up Looker Studio dashboards and keeps them maintained. It's that much effort, but the data you get out of it is incredible. But I'm not aware of a free tool where you can just connect Facebook and Google and analytics and ads and then say, show me my numbers. I don't think that really exists, sadly.
Is there any sort of AI trick people can use to track their metrics that you're aware of? Because I'm just curious.
I try to stay away from AI unless you know what you're getting into, because as I brought up about the eBay example earlier, you could mistake causation for correlation if you don't have a background in data. And a lot of folks in this industry aren't data scientists by nature. So I
Mm,
would always recommend to bring in someone who understands like the GetSmart group data very well, the nuances of data, because we can't take it at face value. When someone says just let the numbers speak for themselves, that's not a good thing. The nuances is where everything the nuances is everything. Context is key. If you don't have the proper context, then you're going to misinterpret it and that could backfire. So, a tool that I have found that I like as an alternative to Google Analytics is very affordable. It's called Fathom Analytics. It's excellent. It's super simple. It's very bare bones. It shows you what you need. I would say
mm,
what 95% of businesses need is right there when it comes to their website. That Google Analytics, yes, it's free, but it may be worth taking the time to install Fathom Analytics and see what you like more because you shouldn't get lost in your own analytics platform. That's the first thing. Also,
Yeah.
you want
yeah.
something that your partner, your agency partner, or your fractional CMO understands as well. So if it's something that's not off the shelf and it's custom made, you want to make sure that people get it and can look around so they can make decisions based upon it. I have found CallRail though to be excellent as a one source of truth for calls and forms because I found that the same person cannot just call, but can put in a form over multiple days, multiple weeks, and to be able to look at people and how they interact and then tie that to your CRM is incredible. That gives you a
Mhm.
much better understanding of the non-linear customer journey that people go through so that you can ultimately make it as streamlined and easy as possible. So
Mm.
I always recommend that companies only choose tools that they'll use, that they can afford, and that work well together.
Yeah, and by the way,
That's
we've
great.
we've been CallRail customers for I think almost 10 years now. I in a previous life, I actually used to build my own phone PBX servers on Linux using Asterisk, if you want to really date me. And when I discovered CallRail from day one, like these people have it figured out, and they have excellent documentation, they have excellent tools, and it just works. It is a very, very
Mhm.
good tool across the board.
Yeah.
Two quick anecdotes, and I know we only have a few minutes left here.
Mhm.
I wanted to share one about AI. I asked it was either ChatGPT or Grok about a month ago to do some research for me. And again, if you know what you're doing, you can usually get close with an answer. But I asked it to put everything into a Google Sheet and just put it in here the columns I wanted and whatnot. And it starts spitting out all the output. And then at the end it says, here's your Google Sheet link. And then underneath it in parentheses, it says, just so you know, I can't create Google Sheets. The above is just a dummy link. Like, so it tried and it gave me a link, but it actually can't do the thing that it gave me the link for, which I thought was very funny. One thing to go back to what Lewis was saying about understanding the context and the nuance. We see this hugely when it comes to Facebook ads and, of course, Instagram ads in the same vein. Because on Facebook, you have a couple of different things you could be going for. One might be just awareness. And so you want your post or your video or your picture to be seen by as many people as possible, right? And so you're going to spend money in a very specific way. Facebook has, I think, 17 different ways to spend money for ads. A third of them apply to apps, so not really applicable here. But so you might one month, it might be, early spring, and you want to just let everybody, hey, it's time for pool opening season. It's time to buy your chemicals for the year. And you just want to shotgun it out there so everybody knows you're out there. But then as soon as that super high demand season changes, you might change your ad goals to leads and you use a Facebook lead ad instead. And so your spend stays the same, but if you just look at one number, number of impressions of my video from one month to the next, you might still spend $1,000, but your views went down 90%. And those are questions that come up all the time. Well, what happened? How come no one's seeing our stuff anymore? Oh, right, because we changed our strategy from month to month. And now, look, last month we got no leads on Facebook. This month we've gotten 50 leads on Facebook. So the spend can stay the same, but those numbers can swing wildly. And so really understanding the context of what you're spending money on and why, and what the strategy was for the look back period that you're looking at is really, really, really critical. And again, just be careful about making snap judgments on data in analytics platforms or dashboarding platforms until you go back and remember, oh, right, we changed this, we did that. That's why these numbers are significantly different.
Yeah. So a couple takeaways here that are the big pieces I heard from you guys are no matter what size business you are, you have the option to get familiar with Google Analytics and start digging in and understanding that. And that's free and it's available for your site. If you want to go a little further, you can explore using Fathom Analytics. Lewis had a great endorsement there for that tool. And it definitely explore using CallRail if you want to get more insights into where your best leads are coming from. You want it plugged into your CRM if you have one, and you want it plugged into your website, and you want to have tracking numbers on specific ad campaigns so you can see who came from Google, who came from Facebook, what are the quality of those leads from those different sources. So CallRail, Fathom Analytics, Google Analytics. Definitely look at and invest in a CRM for your business that can help automate your lead education, lead follow-up, sales follow-up process, and clearly define who your marketing qualified leads are and your sales qualified leads are with your sales team and your management so that you can have a consistent ad and marketing strategy that you plot out quarters, months, years in advance and stick to the strategy to understand what you're spending money on and why you're spending money on that. So those are the big takeaways I heard. Any misinformation there or anything you want to contrast or anything else you want to include in those that list? Yes, Lewis.
Yes. So we had touched on earlier about tools like Google Analytics and Fathom.
Yep.
As a fractional CMO, I use a KPI scorecard, which is a
Okay.
Google sheet. And the reason why it's a Google sheet is it's manually entered every week because everyone owns a number. It creates transparency. And this is what I share with leadership is we're able to see how performance is tracking week over week and then to course correct regularly. It takes out all the glitz and glamour. It takes out all the charts that can be um, uh, misguided, and it just leaves the numbers. Now, it does still take skill to understand what's behind the numbers, but it allows you to see how things are trending and focuses on what matters the most. It's a living, breathing spreadsheet, so it gets updated every quarter. And that coincides with what I do, which is quarterly planning, because I found that annual planning is excellent, but by halfway, say June, July, August, your annual plan, you may not be still on track. So with quarterly planning, every 90 days, you get back to home base and you plan for the next 90 days. That keeps you focused on a shorter period of time and makes it much easier. And then to couple that with quarterly planning are 2-week sprints. That way, every quarter has 6 2-week sprints. So it's less about what are we doing over the next 90 days and what are we focused on for the next 2 weeks.
Love that. So we're going to get this done in this period of time, and then we're going to watch it and see what it does.
Exactly. And then over time, your predictive muscle and what you're able to accomplish over every 2-week period gets better and better. So it's an iterative process, and you get to learn from every sprint.
Yeah, that's great. And I think, oddly, it models after what a marketing agency is doing for you as a client anyway, which is, here's the planning. We're getting all these things in production. We're getting approvals from you. We're writing your content. We're, incorporating your keywords in those things. And then we watch it work. And then we come back and we report on it. And in our company, we report once a month with some of our clients, and with people who are at growth level, we report twice a month and sometimes more frequently. And it's just a matter of what their needs are at that time. But yeah, I see that sprint as a very natural part of that quarterly planning where you just let things roll for that 3-month period. then you evaluate, look at the data, and then adjust for the next quarter to make sure you're not missing your annual goals by not adjusting as frequently. Makes perfect sense. Scott, any other pieces I might have left off the list?
Just one, and I'll just quickly gloss over, but I think everybody will get the concept. It's something when I'm teaching analytics that I talk about are garbage metrics. And what I mean by that, it's not really the underlying number that's garbage, it's the way the number is visualized. And a lot of times, other marketing groups or companies or tools will have these charts. And the reason I call them garbage metrics is because they always go up. And there's like one garbage metric is cumulative website visitors this year. And it just goes up. The chart just goes up. It doesn't nothing changes. And you can't make a decision for your business based on a chart that always goes up forever and ever and ever. You have to look at it segmented by certain periods of time. You'll also get like cumulative leads this year. Oh, look how many leads we've gotten. Like, that's great, but it doesn't help you make a decision for your business. So at the end of the day, really pay attention to how those metrics are visualized and make sure that every metric and KPI that you're focusing on helps you make a decision in your business.
Last thoughts, Lewis?
Understanding the nuances of data is really important. So you're making
Mm-hmm.
decisions with confidence. So bringing on a company like the Get Smart Group or a fractional CMO like myself who can look at the shades of gray within the data, make it so that you don't have to do it all yourself. I find that having different perspectives on data is key. If everyone agrees about everything and it's always groupthink, then it's not going to lead the business in the right direction. So I find that having candid conversations about data, challenging assumptions, and bringing together a variety of different perspectives allows businesses to get better results over the long term.
Yeah, well said. And you wrapped that very nicely with how I started this about talking about different perspectives as well. So thank you for being here. We definitely need to have more of these conversations because we barely scratched the surface of metrics and reporting. So we'll schedule some more. If you are watching and you're interested in learning about specific topics, please drop a note in the comments, whichever platform you're seeing this on, and we'll pick it up and run with it for you. And if you'd like to pick our brains directly or learn about how we can help you with your business with guiding you and understanding metrics or setting up a CRM or any other marketing related things, please reach out to the URLs that are listed. And we'll look forward to having a conversation with you because we have a CRM in place that will send you an email before we even get notified that you've requested information. So thanks for your time. Great job.
Thank you.